Assalamualaikum and good day. My name is Azizul. So, I want to talk about the introduction of this slide. The retail industry is a key contributor to Malaysia economic development as it supports business growth and consumer spending. To remain competitive, companies must have demonstrate strong financial performance. Therefore, financial analysis is essential to evaluate efficiency, profitability, and long-term sustainability. The Malaysian retail industry is highly competitive due to several factors, including changing consumer behavior, digitalization, and the rapid growth of e-commerce, as well as rising operation cost and inflation. This study compared Aeon and Parkson, holding Berhad, for the year 2023. Both companies are listed on Bursa Malaysia and operate within the same retail industry, making them suitable for comparative financial performance analysis.
I'm Varshni. I'm here to explain the next part. For our methodology, we adopted a quantitative comparative approach to analyze the financial performance of Aeon Berhad and Parkson Holdings Berhad, which are both listed retail companies in Bursa Malaysia. The analysis is based on secondary data obtained from the company's published annual reports for the financial year 2023. Our group decided to focus on 1 year only to ensure consistency and fair comparison, as both companies were analyzed under the same economic and industry conditions. Financial ratio analysis was used as the main evaluation tool, covering liquidity, profitability, efficiency, leverage, and market ratios. This method allows us to systematically assess and compare the financial strength, operational efficiency, and risk position of both companies. The data were organized and analyzed using Microsoft Excel to ensure accuracy.
Next, I will present the financial analysis of Aeon and Berhad. Based on the financial performance in 2023, Aeon recorded revenue of RM 4.13 billion. The company achieved a gross profit of RM 1.75 billion and a net profit of RM 114.8 million, result in a net profit margin of 2.78%. This shows that Aeon remained profitable, though a profit margin is relatively low due to high operating costs. Moving on the financial position, Aeon had total asset of RM 5.22 billion, total liability of RM 3.36 billion, and shareholder equity of RM 1.86 billion. This indicates strong asset backing but a high reliance on debt financing. For the equity ratio, the current ratio is 0.51 times and the quick ratio is 0.14 times, which reflects with short-term liquidity. In terms of profitability and efficiency, Aeon recorded a gross profit margin of 42.34%, return on equity of 6.18%, and an inventory turnover of 4.30 times. Lastly, the leverage ratio shows a debt to equity ratio of 1.18 times, but Aeon is still able to cover its interest expenses.
Next, I briefly explain financial performance and financial position of Parkson Holdings Berhad for the year 2023. For financial performance, Parkson recorded a revenue of RM 3.13 million and a gross profit of RM 1.69 million, showing strong sales and good gross profit generation. The profit from operation was RM 512 million. However, due to high operating expenses and finance costs, the profit for the year declined to RM $28.9 million, indicating low overall profitability. In terms of financial position, Parkson reported total assets of Rm 8.53 million and total equity of Rm 2.42 million, while total liabilities amounted to Rm 6.11 million. This shows that although the company has a strong asset base, it is heavily reliant on debt financing, which increases its long-term financial risk. Next, I briefly explain financial ratio analysis of Parkson Holding Berhad for 2023. Starting with the liquidity ratio, Parkson recorded a current ratio of 1 time quick ratio of 0.86 times, indicating the company has adequate short-term liquidity and is able to meet its current obligation without heavily relying on inventory. In terms of profitability, Parkson achieved a high gross profit margin of 52.51%, showing good cost control at the operating level. However, the net profit margin was only 0.3%, while return on asset and return on equity were low at 0.34% and 1.20%. This reflects that high operating and finance costs reduce overall profitability. For efficiency ratios, Parkson recorded an inventory turnover of 4.01 time and a fixed asset turnover of 1.67 time, indicating effective utilization of mixed asset, although inventory management remains moderate. Lastly, for leverage, Parkson showed a high reliance on debt with a debt to asset ratio of 0.72 and a times interest earned ratio of 1.39 times, indicating higher financial risk. Thank you.
Next, we will present a comparison of the financial performance between Aeon and Parkson. This analysis aims to highlight the key differences and strengths of both companies based on selected financial ratio. First, liquidity is measured using the current ratio and quick ratio. Aeon recorded a current ratio of 0.51, with Parkson recorded 1.00. In terms of quick ratio, Aeon has 0.14 compared to Parkson 0.86. This shows that Parkson has a better short-term liquidity position and a more stable cash position than Aeon. Profitability is assessed using gross profit margin, net profit margin, return on asset, and return on equity. Parkson has a higher gross profit margin of 52.51 compared to Aeon 42.34 due to focusing on high-value products. However, Aeon shows better net profit margin at 2.78 versus Parkson 0.93, indicating better cost control and economies of scale. Aeon also has higher ROA 2.20 and ROE 2.18 than Parkson, showing more efficient use of asset and equity to generate profit. Operational efficiency is asset dot inventory turnover and fixed asset turnover. Aeon recorded a higher inventory turnover of 4.30 compared to Parkson 4.01, showing better inventory management. Meanwhile, Parkson has a higher fixed asset turnover of 1.67 versus Aeon 1.34, meaning Parkson is more effective in using fixed assets to generate sales. Leverage is measured using debt to asset ratio, debt to equity ratio, and time interest earned. Parkson has a debt to asset ratio of 0.72 and debt to equity ratio of 2.53, higher than Aeon 0.64 and 1.81 respectively, indicating greater reliance on debt. In terms of time interest earned, Aeon scored 2.74, while Parkson scored on 1.39, showing Aeon can pay interest more easily, whereas Parkson faces higher financial risk. Overall, Aeon has a more stable financial structure compared to Parkson. Market performance. Aeon recorded a higher earnings per share, reflecting stronger profitability with Parkson higher PE ratio suggests greater market expectation for future growth. Overall, Aeon shows strong and more stable financial performance. Parkson although stronger in liquidity net to improve operational efficiency and reduce reliance on debt to enhance long-term performance. Based on the financial analysis, Aeon shows stronger performance in terms of profitability and shareholder returns, with higher net profit margin and returns on asset and equity. Parkson has better liquidity but face higher financial risk due to higher debt ratios. In terms of operations, Aeon is more efficient in inventory management, where Parkson is more effective in using physical assets. In conclusion, Aeon has a more stable financial position, whereas Parkson needs to improve operational efficiency and reduce reliance on debt for long-term performance.
For this conclusion, the financial performance of Aeon Company Malaysia Berhad and Parkson Holding Berhad was compared for the year 2023. The analysis was based on liquidity, profitability, efficiency, leverage, and market ratios. Overall, Aeon shows stronger financial performance compared to Parkson. Aeon performs better in terms of profitability, efficiency, financial stability, and shareholders' returns, indicating a more suitable business position. On the other hand, Parkson has stronger liquidity, which means it is better able to meet short-term obligations. However, Parkson records lower profitability and higher financial risk, which may affect its long-term performance. In conclusion, Aeon is financially more stable, while Parkson faces long-term financial challenges and needs improvement to strengthen its overall performance. For the recommendations, starting with Aeon Company Malaysia Berhad, the company should focus on improving its liquidity position by strengthening working capital and cash flow management. Aeon should also continue its strong cost control and asset efficiency, as this contribute to its stable financial performance. In addition, Aeon is advised to maintain a balanced use of debt to avoid excessive financial risk in the future. For Parkson Holding Berhad, the company should reduce its dependency on debt financing to lower financial risk. Parkson also needed to improve profitability and operational efficiency, as well as strengthen cost control and inventory management to enhance overall performance. From an investment perspective, Aeon is more suitable for long-term investment, while Parkson requires further improvement before it becomes attractive to long-term investors.